Welcome to the number of the day. The number of the day is 10.25%, which is the prime lending rate in South Africa. So if you go and you buy a house or a car and you have to finance it, you go to the bank and usually they use this prime lending rate right now at 10.25% to decide how much they're going to charge you in interest. If you are an amazing customer, very good with your finances, great credit track record, all those blocks checked, then you will get maybe prime minus something, maybe prime minus 1, maybe if you're even more wonderful, prime minus 2. If you're not that great, or if you're okay, you'll get prime. If you're seen as a little bit risky, maybe in terms of your finances or your credit history, then the bank will start charging you prime plus something. So the banks can do what they want. They are allowed to charge you what they want based on their risk appetite. They're obviously not allowed to be unfair. They should treat like customers with like rates. But that prime rate is so important because consumers know it often when they go to their bank. If you don't know it, you should, and you should negotiate the best rate you can get. And a lot of people think, oh, what the bank gives me is what the bank gives me. No, go to another bank, negotiate. You really can. And the banks are often vying for your business behind the scenes. So do your best. Now, the prime lending rate may disappear. We may no longer have a prime lending rate. This is speculation because the Reserve Bank has confirmed to Bloomberg News that it is looking at the prime lending rate. But that sparks a whole lot of speculation about what will happen. And the fact is that South Africa, our interest rate regime, is an anomaly. Many countries have only one interest rate, but we have two. So when the South African Reserve Bank's Monetary Policy Committee meets every second month, it determines what the repo rate is going to be. There's another meeting at the end of January. It determines what the repo rate is going to be. Now, the repo rate is the benchmark rate the Reserve Bank used to lend to the big commercial banks. They also actually borrow at times from the Reserve Bank. So that is the rate at which they borrow. Now, add 3.5 percentage points and you get to prime. So the repo rate is currently 6.75%. So when the Reserve Bank meets, it'll change that repo rate. It'll move 6.75%, hopefully lower. The expectation is that we'll see interest rates coming down even further this year. Maybe it won't happen in January, maybe in March. But then the prime interest rate automatically moves with the repo rate. But there's this huge gap between them. And some people have felt like the banks are coining it because they can charge you prime or roundabouts prime, but they get charged way lower, 3.5 percentage points lower. They get charged currently 6.75% and they charge you 10.25%. So the long and the short of it is that there is a lot of speculation that prime will go and then maybe the banks will feel pressure to give you a lower rate, which would be good for you and me and many South Africans because we are one of the most indebted nations in the world. We have a problem with saving, but we're all living on credit cards and on debt. So that is a problem. I did speak to the MD of Krutham, Peter Atalmantalto, and he said maybe it'll mean nothing because the banks then, instead of charging you prime, they will charge the repo rate plus 3.5% anyway. So he's saying he doesn't believe that the Reserve Bank is looking at this specifically to target the profits of the banks. It's just about simplifying this system, which is quite unusual, although America has something similar, but most countries have one interest rate. So it's about making it all a little bit simpler on the ground. He did concede, and I really think there's something psychological about numbers. If you study negotiation, they say the first number that gets put on the table, say you're asking for a salary, The first number that gets put on the table determines a lot, because the company then won't double that or halve that. They'll use that as the number that they know is acceptable to you, where maybe they would have given you something much higher. So that number has a psychological impact. So maybe he conceded when I asked, maybe the banks will feel some pressure in future. It probably won't affect people with current loans, but maybe in future the banks will feel pressure to come down closer to that new one repo rate, or whatever it'll be called, that'll encompass both rates in South Africa. There will only be one. So maybe they will feel that pressure to come down, and borrowing costs will go down. That would be wonderful. Already, by the way, most loans are pegged to prime, and they're floating. So when prime goes up, your interest charges go up. And we've seen in South Africa before times when people who bought a house when it was affordable just get into so much trouble as the interest rates go up. Luckily, interest rates have been coming down. We saw 3 cuts last year, so we were above 8% middle of last year. Now we're at 6.75%. So you're sitting pretty if you're paying off a house or a car, and hopefully there will be more interest rates in store. Nothing to shoot the lights out, but we do expect some small rate cuts, or at least one this year. In fact, let me repeat that. I don't expect it. Economists and the people who watch this closely, that's the general feeling out there. And the Reserve Bank is targeting, you'll remember, lower inflation. It says we are a country that can handle 3% inflation. Now, inflation, if it stays down of its own accord, if prices are controlled and things aren't going up like fuel prices because of global oil prices, then that is good, because the Reserve Bank doesn't have to raise interest rates, which it does to control inflation. If inflation goes up, however, because of that new target of 3%, the Reserve Bank will likely be even quicker, perhaps, to raise interest rates to keep inflation down. So let's see how it goes. But right now, it's looking good. Interest rates coming down. That is good for the South African consumer, good for everybody in debt, and maybe it'll mean nothing. The Reserve Bank is not commenting, but it is looking at the prime lending rate. Maybe it will abolish the prime lending rate. Maybe it won't mean much for borrowers, but maybe it'll give that little psychological pressure on the banks, and maybe we'll see borrowing costs coming down. And that is the number of the day, 10.25%, your prime interest rate.